Hey there, welcome back to my channel. My name is Brittney Bundles, and today's video is going to go over benefits of paying off your car twice. Now, I thought this was a funny title and also kind of a funny topic because I've heard people say, that sounds crazy, like paying off your car twice. You have to be some kind of person to want to pay off your car twice. Like, why would you do that? And I chuckle to myself because it does sound funny, but there are some benefits for those that are close to paying off your car. Before you sell the car or before you just decide to like junk the car, listen to these benefits to see if they will help you out in a financial aspect, as well as help you continue to build your credit. Credit is something that a lot of people have jumped on the bandwagon for. Now, of course, credit has always been a thing, but it's now trending. You know, there are people and companies that are coming up with different things to do or things you can do to build your credit. And although people's scores are increasing, their overall credit profile is still not strengthening. And they find this out when they go and apply for a loan, or they find this out when they go and, really primarily when they go and apply for a loan of some sort or a credit card, and they're turned down. And a lot of people have asked me the question, hey, you used to work in the financial industry, right? And I'm like, yes. And they say, well, how come my credit score is like now at a 630 and I can't get this credit card, but my friend, their credit score is at a 610 and they were able to get a credit card. Like, what's the deal with me? And I keep stressing, it's not just about your score, but it's more about your overall credit profile. I have more videos about credit in my credit playlist, so make sure you check that out after this video. But without further ado, I am going to go over some benefits of paying off a car twice. Now, ideally, if you have paid off your car, that's a great milestone. I was so happy when I paid off my cars. I was like, whoo, I'm done. And, you know, it's a good feeling. It's a good feeling to not owe anyone anything on that specific car. However, a lot of people use their car as a down payment or trade-in when they are getting another vehicle. And by the time you end up paying off your car, a lot of times it's time for a new one. It just happens that way. Or you might be tired of the car that you had and you want to purchase a new one anyways. You may get tired of putting money into the car, and in essence, you just may want a new car. So a lot of people get rid of their car that they paid off that way. Some people give it to family members or friends. Some people just keep it in the garage. I know the car that I have, I kept it in my garage at the home that I sold about a few years back at this point. Never took it out really. Right now it's parked at my grandmother's house because I live in an apartment complex and I don't want it just parked out here. Anyways, I have it parked at my grandmother's home and it's been there for a while. And I've been going over my options as far as what I wanted to do with it. Do I want to have it as a backup car in case the vehicle that I'm driving now goes out? Do I want to just save it for like my son's first driving car because he's about to start driving in a little bit? Do I want to keep it just as an emergency for collateral or for a loan if I need it? You know, like there's a couple different options I can go over. Do I want to keep it for parts? So I have to decide what I want to do. However, let me go over the first tip. Before I do that, be sure to give the video a big thumbs up. Please make sure that you are subscribed and let's get right into it. So the first benefit is getting a collateral loan. So once you pay off your car, if you are needing funds for, let's say anything, let's say you purchased a home and you need to get some renovations done, and maybe your credit profile isn't that strong. Like maybe after you purchased your home, you started using your credit cards again, and because there's a period when you're in the buying phase where your loan officer may tell you, hey, don't use these credit cards. Don't do any hard credit inquiries. You know, you want to make sure that you're getting this house. So just be on your best behavior credit wise, right? I know a lot of you that have purchased homes, you know exactly the talk that I'm referring to. However, you know, once you get in your home, you may say, hey, I'm using my credit cards again. Maybe you missed a few payments because of everything that's going on. You forgot to pay a certain credit card, or you forgot to pay a certain loan, and your credit score is going down now. And you need some home renovations done. You may say, I wasn't able to get approved for an unsecured loan, but I was able to get approved for a loan with collateral. At that point, if your car is already paid off or if your car is almost paid off, some institutions will allow you to use your vehicle as collateral. What that's going to do is that's going to guarantee the loan a little bit more than, a lot more actually, than an unsecured personal loan, because if you default on the payments, the institution that has lent you the funds, they have collateral to collect so that they can attempt to sell it and not take a complete loss on the loan, versus if they give you money that's unsecured. So you get a lower interest rate a lot of times when you do a collateralized loan. I was working with someone in regards to their plans for their business, and we got on the topic of credit, and they were asking me about interest rates, and they mentioned that they didn't realize that you get a lower interest rate a lot of times if you do a collateralized loan, a secured loan, versus if you do an unsecured loan. And that is true. So a lot of people will do it for the lower interest. Some people will do it because they're not able to qualify for an unsecured loan because maybe they have too many loans out currently. Maybe their debt to income is out of whack, and the loan officer that's working for the institution feels a lot more confident with you securing that loan for the reasons that I just mentioned, so that if you don't pay, they will have some type of collateral to resell and get the funds that you didn't pay back. So that's one perk. Now, another perk is paying off your credit cards or doing like a debt consolidation. So sometimes it makes sense to go ahead and put another loan back on your vehicle if you have a plan to pay off your credit cards. Now, we talked a lot on this channel about credit. So a lot of you know how important it is to utilize your credit cards in the correct way. If you go over 30% of your credit limit, that can negatively impact your score. If you don't use your credit cards, the credit cards can be closed by the card issuing company, which may not have a real negative impact immediately on your credit score. But depending on how long that trade was open, it could affect your credit score and also your credit strength by not having that longest trade on your account anymore. I mean, credit cards are they can either really help build your credit or they can really hurt your credit. So it's very important to be responsible with your credit cards. However, life happens. And so sometimes you get in a position where you have maxed out a lot of your credit cards, where you have even gone over the limit on some of your credit cards, or you've made some late payments. And it may be a lot more beneficial for you to go ahead and put a loan on your car to pay off your credit card. So the institution will get your car information, they'll go ahead and give you the funds, or they'll just cut checks to the credit card companies themselves, pay them off, so you're now at a zero balance. It's going to have an immediate positive impact on your credit score and your credit profile, and then you'll be able to go ahead and make monthly payments on the car. But that is a benefit if you look at it in the aspect of building up your credit. So some people will do this, especially if they're looking at purchasing a home relatively soon, or if they're looking at just getting their credit back on track. That is a way to kind of have a clean slate, but it does put another loan back on your vehicle. The third thing that I want to go over, and I think this is the last thing that I wrote, this one is build credit score. So it can build up your credit score. I was trying to read my writing. Sorry about that. It can definitely build up your credit score because you are making payments. Now, when you pay off your car, you want to remember that your credit is something that is continuing to report. You know, your actions regarding your credit continue to report, whether you pay off your car or not. So if you don't have any more loans on your credit report, any cards, you may notice that your credit report or your credit score and your credit profile are remaining stagnant, or they can even get lowered. So you want to make sure that you're constantly looking at ways to feed your credit score, your credit report. And one way to do that is to make sure that you have a few credit cards, to make sure that you're doing the right action steps behind the credit cards, and to also make sure that you have a secured and unsecured trade line. A secured trade line can be like a mortgage. It could be a car, it could be an RV. An unsecured would be like those credit cards or a loan, personal loan, or just an unsecured loan in general. So that is another benefit to continue building your credit score. Now, you know, I wouldn't recommend going out and just putting a loan on your car just because you just want money to get new shoes and go on a shopping spree. However, everyone's able to live the life how they want to live it. But if you use the second loan in a calculated way, it can definitely benefit you and your credit profile, and also your credit score, which, you know, is included in your credit profile. But I want to make those distinguishes between credit score versus credit profile, because like I said, when I was working as a loan officer, there'd be times that I'll have people with 700 credit scores and their credit profile was not strong. You know, they may have had a 700 score because all they had on their credit report was a credit card, or maybe they had been an authorized user on their parents' card for some years, but they really didn't have any credit or payment history on their own. So for them to look at a personal loan of like $20,000, more than likely, you know, they're not going to qualify. At least they wouldn't qualify through the institution that I was working with, because although their credit score is high, they didn't have a strong credit profile. So I really hope that this video helped. If you have any questions, feel free to leave them down below. Thank you so much for watching, and I will see you all in the next video. Bye.